With asset classes, I think there will be a lot more nuances that come into play. One of the things we suspect is that equities in the developed countries such as the US and the Eurozone could perform better to the extent that confidence in the US economy continues to grow, and the Eurozone takes some positive steps towards resolving the failure to see eye to eye on the banking situation and banking supervision, things like that. Nevertheless, we should not assume that equity momentum would be kept up in the rest of Asia. Our view is that the Nikkei, so Japan, would be quite positive because Abenomics will pan out quite positively, but we do have idiosyncratic risks such as politics in countries like Thailand, Indonesia, to some extent India as well. So these will become a lot more volatile. We think equity market gains in Asia may be somewhat more measured than in the developed economies. In the bond market space, you could see more interest in perhaps higher value or rather higher grade corporate bonds and perhaps on the shorter duration, given that there could be some risks at the longer end of the spectrum if US economic momentum keeps up. And in the FX space, we expect the dollar to gain rather broadly initially, but more against the developed currencies in the later half of the year, as we expect Asian currencies to recoup some of the losses that we saw since summer this year. Well, I think the commodity market picture can become a lot more complex now. One of the things we see is that with QE coming off the table, then the kind of synchronized theme for commodities may also begin to fade. With gold and oil, one thing that could happen is that if QE unravels faster than expected, then gold could be under pressure. And to some extent, that India may maintain the kind of imports ban would also weigh on gold prices, whereas oil has got its own geopolitics playing out. So, for example, the crisis we see now in Sudan, that's going to subtract further from supply, which is already dented by Libya. So oil may remain stubbornly and annoyingly high, and there may be some blips where oil prices could bounce higher, so that we could see some divergence in these major commodity classes.